Hi, everybody. Welcome to this exciting topic, taxes. My name is Roseanne Van Ree. I'm on the board as the second VP for member clubs. And part of this position is our wonderful club workshops, which is what we are doing tonight. And just very briefly, I want to, you'll see our hostess, Melanie Bauer. Melanie is from the Women's Club in Berlin, and she is our club workshops coordinator. But really, you'll see it everywhere in our news and brief. You'll see this about club workshops on our FAWCO website. Please take advantage. This is fascinating, interesting information, not just taxes, but many other topics that we have speakers on our speakers bureau. And I just want to remind you that as a FAWCO member, you have access to all of these club workshops. Melanie will detail a few things as well, and just be mindful of this as a benefit for you as a club member. So I'm just going to say that and leave it off directly now to you, Melanie. And
thank you.
Thank you.
Yes, thank you. Well, welcome again, everybody. It's so great to have you all here. Who knew that 100 women would want to hear so much about taxes? And, you know, it's really great to be able to provide you this. And as Roseanne said, I'm the club workshop coordinator for FAWCO. So if you have any questions, would love to learn more about this program within FAWCO, this great benefit that FAWCO provides, please send me an email or check out the FAWCO website. I'll put my email in the chat and the link where you can find more about club workshops. And yeah, just as Roseanne said, tonight we are taking part in one of the first general club workshops from, you know, usually we do these on a club level basis. So it's really great to be able to provide this to all FAWCO members. And just a few housekeeping notes before I introduce our speaker tonight. We're going to have some Q&A at the end. I know some of you have submitted questions in advance, and thank you so much for that. Nathalie has taken, our speaker Nathalie has taken those into account in her presentation, and we'll answer those. And if you have follow-up questions, we'll have a round of Q&A, and I will moderate that with Nathalie. So please put your questions in the chat and we will be sure to get to them. Also, just to note that our US liaison is here with us today, Johanna. She is also a great resource and an expert on US and banking topics, and she can be contacted for questions within FAWCO, and she herself has also led some workshops on this topic. So she's a great resource within FAWCO that we should remember, and you know, say hi, send her a chat if you have questions or would want to reach out to her directly. And a final housekeeping note, just want to say that, you know, we're all here to talk and learn a little bit more about US taxes. And we're really grateful for Nathalie and her expertise that she's going to provide to us tonight. But FAWCO in general would just like to remind everyone that, you know, each person's tax case is individual. So we encourage you to seek advice from a tax professional before, you know, taking any steps to doing your taxes. And with that, I think we can turn to our speaker, Nathalie. Nathalie, we're so glad to have you with us here tonight. Nathalie Goldstein is a member of our American Women's Club in Vienna, which is amazing to have one of our own here giving this workshop on taxes. So Nathalie, please take it away. We're so glad to have you, and let's learn about taxes.
All right, welcome. I think the first one is thank you for joining, because let's face it, taxes is not really that interesting. So the fact that you're even here, pat yourself on the back. I will try to make it as interesting and easy to follow as possible. I know that's a hard task, so bear with me, but let's see how this evening goes. And I guess not all of you are on our time zone. So if it's the morning for you or a different time, you know, hope you enjoy. So who am I and why am I here to talk to you about taxes? Well, I'm Nathalie. I am the CEO and co-founder of MyExpatTaxes. Maybe you know about MyExpatTaxes, maybe you don't. You will get to know us in this presentation. I am from California and I am based in Vienna, Austria now. I moved in 2015 and I will be a lifer. I have a house, I have a baby now, I have a family. I'm staying abroad for life for the most part. Let's see how things go, but that's the plan. Anyways, so I have a background in finance and information technology. I specialize in US expat taxes. I am an enrolled agent with the IRS, which essentially means that I can fully practice in front of the IRS. I am certified with the IRS. And because I had to go on my own tax journey as an expat when I first moved abroad and realized how difficult that challenge was, I decided there needed to be a tax software for US expats. I was used to using the tax softwares back in the US. And then when I moved abroad and found out that as an expat, I would be paying anywhere between $500, $1,000, $2,000 plus dollars to do a tax return, I just felt that was not very fair and decided, okay, I have the background in it. Let's make a tax software specifically for US expats to make our lives just a little bit easier being abroad. So that's me. What are we going to cover today? So we're going to cover everything about the stimulus payments. I think that's the biggest buzz of this past year, right? And also going into this current year. And then how to get the recovery rebate credit. What is that? And along with that, what are the new tax season changes? Do you need to file filing deadlines? I also have some nice kind of cheat sheet slides in there for you with, you know, topics that you brought up in your questions. So things like retirement in US expat taxes, family in US expat taxes, investments in US expat taxes, FATCA, all that good stuff. But, you know, that comes towards the end. So yeah, let's jump into it. All right, so I'm still talking about the new actually enacted coronavirus relief package. I guess it's old now, but I'm hesitant to put too much information about the third round until we know all the details. So if you've been around and you've heard about the stimulus payments, then you know that there were two different rounds. We will start with kind of key terms to know here. First, Americans abroad. So that's basically all of us. We're all Americans abroad and or maybe US related people. So maybe you have a green card. You're not necessarily a US citizen, but you have a green card living abroad. We are all living abroad and working outside of the US. We may or may not be filing US expat taxes, but we are still eligible for the stimulus payments. So that is the most important thing here is even if you haven't filed US expat taxes, even if you haven't made any US income and you're living abroad, you're still eligible for the stimulus payments. Now, what are the stimulus payments? So before we even really get into it, you know, it's important to know what the stimulus payments are actually called. So if you talk to the IRS, it's going to be called the economic impact payment. If you talk about your 2020 tax return and how to back claim the stimulus payments, it's going to be called the recovery rebate credit. So you're going to see these terms throughout the presentation. I don't want you to be confused. It's all under the same umbrella of the stimulus payments. And the stimulus payments is essentially a financial aid that the US government is giving to every American or lawful resident if they meet the eligibility requirements to get these payments. Now, the first round was $1,200 per taxpayer, plus $500 for qualifying child under 17. The second round is $600 per taxpayer, plus $600 per qualifying child under 17. Now, the third round is the round that is looking to be passed any day now, and that is estimated to be $1,400 per taxpayer, plus $1,400 per qualifying dependent of any age. So that's kind of the big game changer here. But again, if this presentation was a week from now, I'd probably have more details. I unfortunately don't have those details until it's actually passed into legislation and the IRS provides some guidelines around it. But we can look at the estimated amounts for now. Anyways, what are some things you'll need? So you'll need a valid social security number. That's important. A social security number is a tax identification number for US citizens and lawful residents. So green card holders may also have a social security number. Just make sure that you have a social security number and not an ITIN. So that's something that you need to distinguish. Again, if you're a US citizen, you should have a social security number. Also keep in mind, if you were born abroad or if you have children that were born abroad, you may not have a social security number. It is not given automatically. You do have to apply for that. So again, it's very important to have a social security number. You may not have one at this moment. And if you don't, you would need to apply for one, but I'll get more into that. Another thing is just, you can't be a dependent of another filer. What does that really mean? That means that no one is claiming you on their US tax return. So if you are a dependent on a German tax return, a French tax return, that's fine. That has nothing to do with the stimulus payments, as long as you are not claimed as a dependent on a US tax return of another taxpayer. Now, eligibility rules, right? I covered the first two, but we'll go more in depth. Is again, valid social security number. I cannot stress this enough. You do need a social security number to claim these payments, not an ITIN. That means that if you are filing with a non-US spouse that may have an ITIN, just keep in mind that they're not eligible for the payments, but you will be if you have a social security number. If you have children and they have social security number, they are eligible for the payments. If they do not have social security numbers, they are not eligible. So that's really kind of the big thing. Making sure you're not claimed as dependent. I think this is more for the younger members. I think this is more for the younger members out there. So say if you are a fresh graduate of school, you might have been claimed on your parents' tax return. So just, check in with your parents or if anyone else is financially supporting you to see if you were claimed as a dependent on a US tax return. And then what I didn't talk about yet is the income threshold. So you're eligible even if you don't make a single dollar, right? If you're unemployed, if you don't make any money, that's okay. You can still apply for the stimulus payments. Where it gets reduced is if you make too much money. So again, because this is more kind of like a financial aid payment, if you are a high earner, you're not going to be eligible for the full stimulus payment, if even any of it. We will get into the exact income thresholds in a later slide. But, for example, if you're earning over 75,000 US dollars as a single filer, you may not get the full stimulus payments. There are a couple things around that as an expat in a way to reduce your adjusted gross income. But again, I'll get into that. That kind of goes into the tips and tricks section. So this was a question I already saw. It always pops up. If you don't need to file a tax return, if you make no money, how do you claim the stimulus payments? Well, last year, the IRS actually opened up a portal called the non-filer portal, where you could have signed up and you didn't need to file a tax return. I am sorry to say that they closed this portal. I guess it was just too overwhelming or something for the IRS. So now for 2020 taxes, if you have not gotten the stimulus payments yet and you want to claim the stimulus payments, you will need to file a 2020 tax return. Even if you don't make any money, you will need to file a 2020 tax return, because that's the way the IRS is going to know you, and they're going to be able to calculate how to give you the refund for stimulus payment round 1 and round 2. Now, how do you actually get the stimulus payments, right? You file your taxes, like I said. So if you were to use MyExpatTaxes, which is our tax software, or any other tax software out there, or if you were to ask a tax firm, they should be asking you 2 important questions. Is how much of the economic impact payment round 1 did you receive, and how much did you get for round 2? Obviously, if you've never filed taxes, if you have no idea what we're talking about, you probably haven't gotten any, so you would just say 0. Now you then complete your 2020 taxes, right? So you add up all your income, what are your deductions, things like that, to get to your adjusted gross income. So this is the amount that the IRS will use to calculate your eligibility for the stimulus payments. Because as you can see in that screenshot in the middle, it's a little bit small, but that is actually from the recovery rebate credit worksheet in the instructions for the IRS. So for any of you paper filers out there, the ones that do your taxes yourself, all the power to you. If you wanted to know where to actually calculate the recovery rebate credit, you would go look for this worksheet in the IRS instructions. And you can see there, if you're married filing jointly or a qualifying widow, your adjusted gross income should be under 150,000 USD. If it's 150,000 USD or over, your payments can be reduced down to zero. If you're head of household, that would be $112,500. And if you're single or married filing separately, that would be $75,000. I will tell you as an expat, there are a couple ways to reduce your adjusted gross income. And the main one is using the foreign earned income exclusion. So say, for example, you are living in Belgium. You make the salary equivalent of 100,000 US dollars. So on your income tax return, you would have 100,000 US dollars. You would then use the foreign earned income exclusion, form 2555, to effectively minus 100,000 US dollars from your tax return. And then you would get to an adjusted gross income of zero. And then you would be eligible for the full payments. Now, if this is a moral thing to do, I don't know. I can't answer that question for you. But as an expat, if you are a high earner, you can actually still qualify for the stimulus payments. So if you were to use MyExpatTaxes or another tax firm or tax software, they should know this information and be able to help you claim the full stimulus payments. So regardless, if you do qualify, you would see on your Form 1040, which is basically your cover sheet to the IRS of what your income summary looks like. You would see on line 30 of your Form 1040, I've highlighted it there, the recovery rebate credit. This is the refund you get for stimulus payment round 1 and round 2. So if you already got those stimulus payments, you're not going to see any amount here. You're going to see zero because you got everything that you were owed already. If you did not get it, or if you got a reduced amount and because of your 2020 income profile, it looks different, maybe you'll get a refund there. Regardless, assuming that you don't owe anything else, then you would see down on line 35A, the other line I highlighted, of what is your refund from the IRS. You're going to go ahead and really look to e-file your 2020 tax return, because if you paper mail your 2020 tax return, honestly, the IRS is going to take a very long time to process it. They still have a stack of papers that they're trying to go through. They're encouraging everyone to e-file. And as an expat, you can e-file. Most tax softwares, I will warn you, that are US based will not let expats e-file, because say you're married to a non-US citizen and they don't have an ITIN or a social security number, that might disqualify you from e-filing in most tax softwares out there. MyExpatTaxes will still let you e-file, because we know that most expats that are married to non-US citizens, and that shouldn't disqualify us. So we do work with the IRS directly to ensure that 99% of our expats can e-file their 2020 tax return. But regardless, a recap. So again, any of the stimulus questions that you had sent in, I hope that this kind of gives you the recap for it. When do you need to file a 2020 tax return to claim your stimulus payments? 1, you did not receive any payments yet. Definitely file a 2020 tax return so you can claim them. If you have a different tax profile, so say you had a child last year, or your dependents just got social security numbers, or say that you were claimed as a dependent last year and you're no longer claimed as a dependent this year, or that your income changed, say that you earned really a lot of money last year, maybe this year, because of the pandemic, something happened and your income dropped down, you should file a 2020 tax return to get a recalculation of how much stimulus payments you can get. So for example, for me, last year, I had a daughter in June. Can't believe it's almost been a year. 9 months is coming up. But anyways, so I had a daughter. Obviously, my stimulus payments did not account for my daughter because she was just born. I didn't have a social security number for her. So for my 2020 tax return, I will claim my daughter on my 2020 tax return because I will get her a social security number. And that means that I will get the stimulus payments for her on my 2020 tax return. So I will get the $600 from round 1 and the $500 from round 2, and anything else really should be calculated in there. So that is a reason to file a new tax return if something changes. If you've never filed US taxes, right? So you're sitting here going, I didn't even know I needed to file. I have a slide for you, don't worry, but definitely file a 2020 tax return so that you can claim your payments. And if you have updated information, right? Because keep in mind, there is a round 3 coming, maybe there's even a round 4. who knows? The quickest way to give the IRS your updated information, such as your address or banking details, is to just e-file a new tax return, because then it will be directly in the system. So again, even if you have $0 income, you normally don't file your US taxes, right? And you want to claim the stimulus payments, you will need to file a 2020 tax return, and you should really look to e-file your 2020 tax return. If you go through any system and they try to make you paper mail your 2020 tax return, I would honestly recommend a different alternative, because if you paper mail it, it's going to take a few months to get over there. Then it's going to take a few more months to get processed. And then it's going to be a very long time before you see anything of the stimulus payments. So that's the stimulus payment recap. Now, I'm sure there's a bunch of questions, but we'll hold them towards the end. We'll get into, why do you even have to file as an American abroad? We don't even live there anymore, right? The majority of us don't, have any income there anymore, no investments. We're completely abroad. But I'm sorry to say, it is kind of the cost of your US passport. It's a joke, but not really. So if you take out your passport and you dust it off, because I'm sure it hasn't gotten too much action lately, just go ahead and flip to the back. You will see that snippet that I put on the slide in your US passport. So technically all of us should have known as an American abroad that we had to file our taxes, because the IRS put it in our passport. Of course they would. But regardless, you are subject to the same taxation laws as your family and friends back home. You have to file a tax return if your gross income is over the tax filing threshold from all sources. So you'll see the tax filing thresholds in that table on the slide. I won't read them all out, but most important thing to note is this is from all sources. So if you are saying, let's say you have a German pension right now and you're getting distributions, you are actually living in France, so you're getting a French salary at the same time, and you have some US investment income. What is your gross income? It is your German pension distributions, it is your French salary, and it is your US investment income. Every single dollar you earn, no matter from which country, no matter from what source, will be counted as gross income for the most part. So just keep that in mind. Even if you have no US income, if you have foreign income, you still have to count that, because the IRS taxes you on your worldwide income. But that doesn't actually mean you always have to pay taxes. I will say, before anyone gets terrified here, most expats do not end up owing taxes or paying taxes. So please, if you're nervous right now, don't be nervous, right? If you haven't filed your taxes, if you're freaking out, just don't freak out. It's fine. There's a lot of people that they haven't known that they've had to file their US taxes. There's an amnesty program that is, you can use if you would like to. I don't think if you go to the US, they're going to stop you at passport control and take away your passport. I know a lot of tax firms try to scare expats abroad, saying that if you don't file your taxes, the IRS is going to take away your US passport. That's really not a thing unless you owe a lot of money. So you would have to owe over 50,000 US dollars. I've only seen it in one case. In our years of doing expat taxes, only one client has come in saying that IRS is trying to take away his US passport. And that's because he really did owe a lot of money over a lot of different years. But the average expat, that's probably not going to be a thing. But if you're not sleeping well at night, if this makes you nervous, if you're looking over your shoulder, wondering if this is something you should do, just file your US taxes. You probably won't pay any taxes. It's, it's some paperwork, but MyExpatTaxes is a great tool you can use to get through that. And for 2020, you might get a refund. So, hey, why not, right? If there's any year to do it, you should do it for your 2020 tax return. Anyways, another question I saw was, you have children. They are, 18 now, 20 now, and you're wondering, do my children have to file US tax returns? How do I handle that? Remember, a tax return requirement is based on income, not age. So just because your US children turn 18 or they turn 20 or they turn 30, it does not automatically mean that now they have to file a tax return. They have to file a tax return when their income meets these filing requirements. So again, based on income, not on age. Every year, the filing requirements will change. It's usually in line with the standard deduction. Just keep in mind, I don't have a typo on the slide. If you're married filing separately, the filing threshold is $5. They changed this for the 2018 tax reform. They never changed it back. I don't know why. So if, again, you're like me, you're married to a non-US citizen, you're filing as married, filing separately. If you make enough money to buy Starbucks in your country, you have to file a tax return because the threshold is only $5. I don't know why, but it is. So that's pretty much it. I'm sorry, I just can't elaborate on that more because it's as ridiculous as it sounds, but that's the truth of it. So we live with it. Anyways, now another thing to keep in mind is if you're self-employed. So even if you're not fully self-employed, say you've just been doing a couple of side gigs, maybe you're selling something on Etsy, or you're doing some freelance writing on the side, that may be counted as self-employment income. If that's self-employment income and you have over $400 in net profit, you have to file a tax return regardless of the filing threshold, because the US is going to assess if you owe self-employment tax, which is a social security tax. Most of the time, you probably won't need to pay US self-employment tax if you're in a country with a totalization treaty and you are registered as self-employed in your local country. That's a bit getting into the details, but just keep in mind that if you are freelancing, if you are self-employed, you do have a different filing requirement than someone that's just salaried. All right, so that's the filing requirements. And now we get into what happens if you've never filed, right? Is the IRS going to come get you? Probably not. Obviously now there's a lot more data out there. It's a lot easier to go through the data. Maybe one day you'll get a letter. Who knows? If you want to get on top of it, there is a US tax amnesty program for Americans abroad. It's called the Streamlined Procedure, and it's actually really nice. So say that you moved abroad 10 years ago, or you're an accidental American, you didn't even know you had to file taxes. You haven't done it for 10, 20, 30 years. That's fine. All you do is complete 3 years of back taxes. So that would be for now 2017, 2018, and 2019 of your federal tax return. You would then complete 6 years of back FBARs. FBARs stand for Foreign Bank Account Reports. We'll get into that. That's a whole another section in here. But essentially, you would file those. That would be considered your streamlined procedure application. There will be no late filing penalties charged under this program. And most expats don't owe back taxes. A lot of them actually get refunds. If you do owe tax, there is interest charged, but there's no late penalty, so that's nice. Now I'll give you a nicer story. That's, sounds a bit better. We have a lot of expats come into MyExpatTaxes and they've never filed taxes. They can do the streamlined procedure through our software. And then they have children. They have children that have social security numbers. And they live in a country where we can use the foreign tax credit. I kid you not, we have so many people that we can deliver a nice streamlined package to that says, I know you haven't been filing taxes. I know you've been scared, but actually the IRS owes you money, right? So say, for example, you have 2 children, they're under 17, they have social security numbers, and you're doing this. You may be eligible to get $2,000 back on your 2017 return, and then $2,800 back on your 2018 return, another $2,800 on your 2019 return. That's a lot of money that you're just going to get from the IRS, and they charge you interest if you owe taxes. They will pay you interest if they owe you tax money. So, and the interest rate at the IRS is really good. So we definitely, I think that's a nice story. So again, if you're freaking out, please don't freak out. Most expats don't owe taxes. Obviously, if you have a lot of US source income and you have a lot of things going on, yeah, maybe you will owe taxes. But for the most expats that have nothing to do with the US, you don't end up owing taxes. And if you have children, maybe you get a refund. So why not check it out? Regardless, that's the streamlined procedure. That's how you get caught up. If you do that, you apply through it and the IRS approves your application. We have yet to see the IRS reject the application, but assuming they approve your application, you get a clean slate. You are seen as tax compliant. They're not going to ask you about 16, 7 or 8, 16, 15, 2014, any of that. You're caught up. You're good to go. So that's nice. Keep in mind, if you have been filing your taxes, but you haven't been filing the FBAR, you can still use the streamlined procedure, or you've been filing your FBARs, but you haven't filed your taxes, you can still use the streamlined procedure. So just, you can use it for any situation really. Now, again, you want to file your current year, your 2020 tax return. As much as I want to tell you, just e-file. Try not to paper mail it because the IRS is just not processing them. We had expats that had paper mailed their 2019 tax return, and they're still complaining that they haven't gotten their stimulus payments yet or anything. So if you can e-file, try to e-file. Just keep in mind as well that if you are doing streamlining, you will have to paper mail those tax returns. Prior years normally cannot be e-filed, but as long as you can e-file your 2020 tax return in ASAP, the IRS will have your information so that they can give you the refund for stimulus payment round 1 and round 2, and that you'll be in the system for stimulus payment round 3 and anything coming in the future. So, that's our offer at the bottom. We do offer the streamlining package. Most firms charge a lot of money. As my mission is to make it affordable to do your expat taxes, keeping in mind that there are real people doing the tax return. I know we're a tax software, but I look at tax returns every single day. I do them myself. I have a team that does them. We do have to charge some money to cover, the cost, keep the lights on, but we try to make it as affordable as possible. Anyways, there's a discount code. Take it if you will. Let's move on. What are the deadlines? All right. So as with the IRS, everything's a bit confusing. Everyone knows April 15th is the deadline. I think especially if you live in the US, you know this date. It's in every TV show around this time frame, April 15th. Now, April 15th still stands. That is the deadline for payments. If you're an expat, if you're an American abroad, or you're abroad on April 15th, you qualify for an automatic 2-month extension, meaning that you don't need to file anything extra. You don't have to file an extra form. You don't have to file your taxes until June 15th. But keep in mind, if you owe taxes, you still have to pay by April 15th. You just don't have to file until June 15th. That sounds crazy because you have to file to know how much you owe. It's a chicken and egg situation. It is what it is. But yes, April 15th is the deadline for payments. If you don't think that you owe anything, you can go ahead and wait till June 15th without any, penalties or consequences. If you think that you may owe taxes, I do recommend to at least see how much you would owe to make an estimated payment. Again, if you go through MyExpatTaxes, before you even have to pay, you'll see if you're due a refund or if you owe taxes right away, and then that can help you make a decision about if you pay estimated taxes or not. Anyways, so if you do need a filing extension, you can file one with Form 4868. You can go ahead and print out that form and paper mail it. You can use a tax software to file it. Most tax softwares will allow you to file it for free, such as we do. Or there's also another trick. If you make a payment by your due date, you also get this filing extension. So if you went to irs.gov/payments and you paid $1, you should also get this extension automatically. Just make sure you keep your record of payment. I think someone unmuted themselves, by the way, so probably try to mute yourself. I know that there's a bunch of questions. I promise I'll get to as many as I can. Regardless, why would you want to file an extension until October 15th? There are 2 main reasons. One, you just don't have your information ready yet because obviously your local country may not be doing your tax return that fast. So you're just waiting for information. That could be one reason. Or another reason is, say, again, let's look at my situation. I'm getting a social security number for my daughter. That can take time, especially now with the pandemic. The consulates are not always taking appointments. If you file an extension, then you have that extra amount of time to get your affairs in order. So if you need a social security for your children, right now you're thinking, I have children, they are US citizens, but they don't have social security numbers. I now need to rush to get them before June 15th. You don't need to rush. Just make sure you file a filing extension until October 15th. Then you have until October 15th to get their social security number and then get them on your tax return. You can actually file another extension until October 5th or until December 15th, but that one's a little bit tougher because you have to write like a personal letter to the IRS. So we try not to recommend it too much. But basically, there's options to extend your tax return filing deadline. And let me think, back taxes, probably just do them ASAP. Again, if you owe tax, interest is accruing every single day. So just get out of the way if you can. It's pretty much it. So these are the filing deadlines. And, a little bit about MyExpatTaxes. This is MyExpatTaxes. You can e-file as fast as 15 minutes. It's a US expat tax software. You go in, you create a free account, you enter in your information. Some of you may decide you don't like a tax software. You can always upgrade to talk to a tax professional, me, someone else on my team, etc. Some of you don't want to talk to anybody. You just want to do your tax return. That's fine. You just go through the process, enter the information, see how much you're due or how much you owe, pay, and then immediately you'll see your draft. If you can always say that you don't agree with your draft or you have questions, obviously someone will be there to answer. It's just not a computer program. Keeping in mind, we're all human, so we do take some time to answer emails, but that is MyExpatTaxes. We're there for you as you're considering any tax professionals or tax services. Let's get on with information. All right. I hope this will answer a lot of questions I see going into the chat right now, because again, these were the questions that I had gotten ahead of time. So I tried to summarize them in these helpful slides. Your family in US expat taxes. All right, you're married to someone. Basically, two questions for you. Are they a US citizen or green card holder with a social security number? If yes, then you guys can file married filing jointly and include them on your tax return if you like. If you're married to a non-US citizen, commonly known as non-resident aliens, aka NRA, you can leave them off your US tax return, but you will have to file as either married filing separately or head of household. You cannot file as single. If you're legally married, do not file as single. You have to file as married filing separately, or if you can qualify for it, head of household. You do not need to get them an ITIN to e-file. If you use, TurboTax or any other tax software from the US, they're going to tell you you cannot e-file with an NRA spouse because they need an ITIN. No, you don't need to go through the process of getting them an ITIN and signing them up with the IRS. There's no reason for that, right? You can really e-file a tax return as married filing separately with just NRA as, their title. That's perfectly fine. The IRS accepts that, and that's how we file our tax returns for those clients. That's your spouse. Now, if you have children, what do you do? If you have children and you want to claim them on your US tax return, they need a valid social security number. There's no way around that. You may be sitting here thinking, why would I subject my children to US taxes by getting them a social security number? I hate to burst your bubble, but if you gave them US citizenship, they're subject to US taxes one day, right? It is not based on if you have a social security number or not. If your child is a US citizen, then they are subject to US tax law. So if they make enough income, one day they'll have to file a tax return. You will make their life a lot easier if you get them a social security number now. We have a lot of accidental Americans that come in and their parents never signed them up, never got them a social security number. So one, they find out they have to file back taxes. So they have to go through the streamlined procedure. And then they realize they don't have a valid social security number. So now they have to wait, 6 months to a year to get one. And it's a lot harder when you're older to get a social security number. It's a pretty quick process as a baby. So just keep that in mind. If your children don't have social security numbers and you're trying to protect them from the US tax law, if they're already US citizens, they're already subject to them. So might as well get them a social security number. Again, your personal decision, just kind of my take on that, because we have a lot of people ask me that question. Regardless, if they're financially supported by you or you and your spouse together, and they're living with you for the majority of the year, right? Keeping in mind, if they're away at university or something like that, the IRS still considers that living with you because their primary home is still with you. They're just, off at university. You can claim them as a dependent. And if they're under 17, regardless of the pandemic, you may qualify for the additional child tax credit up to $1,400 of a refund per year. So you don't have to make US income, you don't have to pay US tax, but if you have enough earned income, you have enough foreign tax credit, or you don't need to use the foreign earned income exclusion, you can qualify for the additional child tax credit and get this refund every single year until they are 17 or over. That is your family in US taxes. Investments in US expat taxes. If you have US investments on a US expat tax return, it's pretty easy, right? It's US source money for the most part, but basically, I think the first thing is, does your financial institution allow this? I know a lot of expats that try to sign up with, the big brokerage firms, and they get kicked out because they don't have a US address or one reason or the other. Basically, if your financial institution does allow you to still have investments, that's fine. Just be aware of how your local country may tax your US investment income. So obviously I cannot provide you advice on that because I'm only a specialist with US expat taxes, not with German or Austrian or French taxes. So I can't give any advice there, but just keep in mind that that may also be taxable in your local country. Now, if you have US investments, you'll most likely get a lot of 1099 documents, right? So 1099 DIV, 1099 INT, 1099B, whatever. You store these documents and you just report them on your tax return as indicated, right? If you use MyExpatTaxes, we have a whole section for US tax forms. And if they're US investments, you'll probably qualify for the favorable tax rates, such as qualified dividends and long-term capital gains tax rates. Now, the fun stuff, what if you have foreign investments, right? So non-US based investments, are they taxable? Of course, because the US taxes everything. Remember that. Your worldwide income is subject to US tax. So you would report it as normal, right? You have an Austrian bank account and you get interest in your bank account. You report that as interest. If you get dividends from some type of foreign investment, you report it as dividends. If you sell any foreign assets, you'd report that as capital gains. If you sell your house in a different country, you also report that as capital gains. Keep that in mind. Now, as I said, foreign investments are fully taxable in the US. So I know in the UK, you have ISAs, which are not taxed for your investment income. I know in Canada, you have tax-free savings accounts. They are not taxed in Canada. I am sorry to say, but they are still taxable in the US. So keep that in mind when you make your investments, that if you're a US citizen, you may not really benefit from all these tax favorable accounts because the US will be looking to get their cut. So anyways, moving on, this is not considered earned income. So if you're thinking, oh, I'll just use 2555 to exclude all of my investment income, I'm sorry, you can't. That is not earned income, that is passive income. You cannot use 2555 to exclude it, 2555 being the foreign earned income exclusion. You would look to claim foreign tax credit on Form 1116. Again, MyExpatTaxes, we have a whole section where you can put in all your foreign income, foreign salary, foreign investments, foreign capital gain sales, foreign house sales, whatever. We'll figure it out for you. But if you're doing it yourself, just make sure you don't put it on your 2555, put it on instead on 1116. And beware of foreign pooled funds, aka mutual funds, due to the PFIF reporting, which is done on Form 8621. So I think there's a really bad rep for foreign pooled funds. If you were actually in some of my workshops before last year, I kind of pretty much told you to stay away. I will say I have a different perspective on them. I think with proper planning, it's okay. It's okay. If you have proper planning, if you think about your US tax situation before you buy your foreign mutual funds, and you know that you may or may not have to file Form 8621 and you plan properly about what elections you're going to take, it can still work out very well. Now, if you have no planning, if you just buy a bunch of foreign mutual funds, you're probably going to get a really big surprise on your US tax return because of these forms. The two surprises come from the fact that, one, this form is very expensive to complete. The average cost of a tax firm to complete a Form 8621 for you is on the low side, $150 upwards. We do offer it for quite a lot cheaper at 49 euros. That is because we make you essentially collect all the information. So it's easy to put into our software and compute it. But if you just kind of throw the typical accountant a bunch of brokerage statements, you can expect to pay a lot per form. You have to report this 8621 per mutual fund. So if you have 5 mutual funds, that's 5 forms times 5 or whatever they charge for that form. And then the IRS will most likely tax any distributions you have from a foreign mutual fund in a really terrible way, where you can expect that you'll probably owe US income tax always on any distributions. So just keep that in mind. I know that this is a very dense topic. I went through it so lightly, trying to make a little bit of a joke out of it too, but it is a tough topic. If you're thinking about making foreign mutual fund investments, do some planning, right? Here are the keywords for you to search on Google or to talk to a tax consultant about. PFIF 8621, it's just, don't just buy foreign mutual funds because they have a good tax advantage in your local country. There can be some tax consequences on your US tax return. So that's my one slide about investments in US expat taxes. I know there's a lot more we can go into, but we don't have all day. Retirement in US expat taxes, another good topic. So I think US retirement's pretty straightforward, right? Social Security benefits, or if you get a 1099-R. I will say I am a specialist in US expat taxes. I know there were questions sent in about Social Security benefits, like the windfall provision or how to handle that. I'm not an expert on Social Security benefits, how to calculate that, so I cannot touch on those topics. But I can tell you that if you have a foreign pension or you have foreign Social Security benefits, you're going to be reporting the full gross amount on the relevant lines on Form 1040, right? So you still have to report your foreign pensions and your foreign Social Security benefits. Now, what you can do is determine if there's a tax treaty benefit in the US tax treaty with your local country for this income. So if there is, you use Form 8833 to claim the tax treaty benefit. So for example, I get Austrian Social Security benefits. In the Austrian and US tax treaty, it says that Social Security benefits are not taxable by the US because it's only taxable by the payer. The payer is Austria. Therefore, it's not taxable in the US. I would use 8833 to reference the article in the Austrian US tax treaty and tell the US that, yes, I got 10,000 equivalent of Austrian Social Security benefits, but $0 of that is taxable. Again, I know I just briefly went through that, but that is really kind of how that application goes. Now, if there is no provision in your tax treaty with the US, with your local country, is what I mean, then you would report any foreign income taxes paid. So definitely keep track of that. So if you have a foreign pension, you're paying some income tax on that in your foreign country, just make sure you report that on your US tax return so that you can claim the foreign tax credit against any US taxes owed on your foreign pension. So that is, again, very brief kind of 3-step way to report foreign pension and Social Security benefits. Basically, I'm sorry to say, yes, foreign pensions and Social Security benefits are reportable on your US tax return. They may also be taxable, and you can really only use foreign tax credit or the foreign tax treaty to help you out. You cannot exclude this on 2555 because it's, again, not earned income. I'm losing my breath. Yeah, so these slides I will gloss over so we can actually get to Q&A. This is more for your reference. The slides I assume will be sent out to everyone, so you have this. If you want to understand your tax return or you're doing it yourself, again, kudos to you if you're doing it yourself. These are the forms you may expect to see in your tax return. You're going to see a Form 1040. That's the overview form. You're going to see some schedules attached to 1040. Funny story is that actually is also because of the tax reform that came in for 2018. And if you remember this whole thing about cutting up the tax return into a postcard size, that's a consequence of it. So they actually wanted to make the tax return smaller and easier for people to do. What they ended up doing is adding more papers to it. Anyways, I think it's funny. You may not think it's funny. I think it's funny. Okay, going on. If you're claiming the additional child tax credit, right, that $1,400 per qualifying child with a Social Security number under 17, you would expect to see for Schedule 8812 and the child tax credit worksheet in your tax package. If you're using foreign earned income exclusion, you will expect to see Form 2555. If you're using the foreign tax credit, you will expect to see Form 1116. If you are using a tax treaty benefit, you will be seeing Form 8833. And if you're disclosing your foreign financial accounts, you will be filing an FBAR. Keeping in mind, the FBAR does not get included with your tax return and sent to the IRS. That is sent directly to the US Treasury through their own secure portal. And if you need to, you may also be filing Form 8938. That is actually included in your tax return. I know I just said a bunch of numbers to you. For anyone that's super tax savvy, you know what I'm talking about. For anyone else, again, this is your helpful cheat sheet to just kind of understand what is in your tax return. Why is this thing 50 pages long? It's because of all this stuff that you have to include in it. Moving on, what are the different expat tax benefits? We have three main expat tax benefits. There are probably more, different deductions, all that, but this is what it boils down to. What are you using on your tax return? You could be using the foreign earned income exclusion. That's the first one. That's the most common expat tax benefit that excludes up to, for 2020, up to $107,600 US of earned income. I think it's relatively easy to use, but it's pretty straightforward. It's great for people that have been living abroad for over a year, living in a lower income tax country, meaning that you pay a lower income tax rate than you would in the US, in your local country. There's a lot of limitations though. You cannot claim the additional child tax credit. If you exclude all of your income with the foreign earned income exclusion, you cannot contribute to your US IRA. A lot of expats get that mixed up. Say you make $50,000 US equivalent, and then you want to contribute to your traditional or Roth IRA in the US. You contribute $6,000. And then you use 2555 to exclude $50,000 US from your US tax return as an expat. Guess what? Now you have taxable income of zero, which means your IRA contribution limit was not $6,000. It is zero, which means now you have an illegal $6,000 Roth or traditional IRA contribution that is, subject to 6% excess tax every single year until it's withdrawn. Yes, it's confusing. Again, if you're contributing to a US IRA, really think about how you're doing your taxes because it's very important as an expat. A lot of people fall into this. I think I tell at least 2 or 3 people every day that they have to withdraw their IRA contributions before the deadline of the tax return because they just don't have enough taxable income to cover it. Regardless, if you do use it, you want to revoke it, there's a 5-year period to wait between revoking it. So this is not an expat tax benefit you want to start unless you know you're going to keep with it. Anyways, foreign tax credit is the other one. This is Form 1116. It uses your income taxes paid to offset US taxes owed. So I live in Austria. I pay Austrian income tax. Say that I pay the equivalent of $10,000 of income tax in Austria. On my US tax return, I would owe $7,000 of US income tax. I can use the $10,000 I paid in Austria, put it on my US tax return, and use the credit of it. So it would be $7,000 US tax owed minus $7,000 of foreign tax credit. That would equal 0 taxes owed to the US. Awesome. And then I would have $3,000 of Austrian foreign tax credit to carry over into the next year. This one's a little bit more difficult because it's a lot of math, as you can just tell from my example I had. But the pros are that you can claim the additional child tax credit. You can probably contribute to your US IRA because your income is seen as taxable. So you have taxable income to help you with your contribution limit. Obviously, the tax calculations can get very complex. If you use 1116, there's also an alternative minimum tax version that you have to fill out, AMT. If you're living in a country that doesn't have a big income tax rate, this is not going to really help you because say now I reverse it and I only pay the equivalent of $5,000 of US income tax in my local country, but the US wants $7,000 from me. I only have $5,000 of foreign tax credit. I have to pay that $2,000 difference to the US. So again, you have to figure out what is better for you, foreign earned income exclusion or foreign tax credit. In the MyExpatTaxes, we have an algorithm that figures that out immediately for you. So you don't have to do too much thinking or strategy into it. But if you do your taxes yourself, or if you're hiring someone, this is something you need to kind of consider. And then of course, there's a tax treaty benefit, which I talked about. It just helps you to exempt certain types of income from US taxes. So it's pretty difficult because of course you have to know how to read the legal language of your tax country. You have to know how to claim it, et cetera, et cetera. So those are the main expat tax benefits. FATCA, FBAR. Basically, these are just links to where you can get the form. What is FATCA? The Foreign Account Tax Compliant Act. It's a US federal law. I like to call it as the double reporting requirement because when you went to open your foreign banks, I am so sure they gave you a stack of papers and said, hey, fill this all out because you're a US citizen, give us your social security number, authorize the IRS to look into your bank accounts here in Austria, Germany, France, etc. And we're going to give all your information over to the IRS and US Treasury. Great. Now, on the other side of that, you as a US citizen also have to disclose this information. So your foreign banks are sending your information to the US Treasury. You also have to do it yourself if you pass over the thresholds. The FBAR threshold is if you're over $10,000 max in combined from your foreign accounts. I will go into a slide how you calculate that. That is normally due on April 15th, but there's an automatic extension until October 15th. So honestly, it's due October 15th if there's an automatic extension, but technically it's due April 15th. And you know, there are penalties. You can see it on the screen. I'm not going to read them out. I will say they look like huge amounts. I've never really seen the IRS, you know, charge this fine to someone for not filing an FBAR. It doesn't mean that they won't. It doesn't mean it won't be more common. I will say that, again, if you haven't been filing your FBARs and you're sitting there terrified right now because of these penalties, please don't be. Use the streamlined procedure. Obviously, protect yourself, but don't think that because you haven't been compliant that the IRS is going to knock on your door demanding $100,000 tomorrow. I really doubt that's going to be the situation. But obviously, you know, be proactive and protect yourself before that day ever comes. Now, the other form is 8938. That is a form you file if you have more than, you know, $200,000 in your foreign accounts. That's something you include with your tax return. It's basically the FBAR, but kind of on steroids because there's a lot more information they ask. Anyways, it's just basically the same information that you're reporting. Again, just, you know, in a different format with a couple other questions attached. There is a penalty again with this form. So if you do have to file, make sure that you do. This is something I tell folks that, you know, do their tax returns themselves, or they use a US-based tax software, or they use a US-based accountant. A lot of them just don't know about these rules. And it would be really unfortunate if you have been filing your taxes, but you were supposed to file form 8938, but the person that did your taxes just wasn't aware of this requirement, because this form has, you know, a $10,000 penalty on it, and it's just not worth it. So whatever you do, whoever you choose, make sure that they know expat taxes and they understand FATCA and how that is integrated into your tax return. How do you calculate your max? Because that's a really weird number to calculate. It's not your ending balance in your foreign accounts. It's not your average balance. It's your maximum balance. You're going to go ask your bank, hey, bank, what's my maximum account balance? I don't know. Figure it out yourself. I actually had a FAWCO workshop for Colombia last week, so that's why you see Colombia. Anyways, so the main thing here is, how do you calculate your maximum? You're going to look at all of your foreign accounts. You're going to ignore any US accounts because, again, foreign accounts only. You're going to calculate the maximum balance. What I do is I either take a spreadsheet of all my transactions and I basically look for a running balance in total and figure out what's the maximum. I think most people probably don't do that like I do. So you can try to look at your monthly statements, right? Your bank should be able to provide you at least monthly statements. And from the monthly statements, you should be able to figure out what was your maximum balance. Keeping in mind, it is the minute that you have money in account, that can be your maximum balance. So here's an example. You have bank account number one, you have 10,000 euros in it. You open up bank account number two the next day. You transfer the 10,000 euros to bank account number two. Guess what? You actually have a maximum of 10,000 in bank account number one, and you have a maximum of 10,000 in bank account number two. That's exact same 10,000 euros, but you will report it twice as a maximum value because that was your maximum in each account. So even if it's only in your account for a second, you transfer money in, it goes right out. If it's in there for a second, it counts as the maximum for that account. If you go over the threshold of 10,000 US dollars for the combined maximum of all your accounts, so you know, you have two accounts, both of them are under 10,000 USD, but combined they're over, you will have to report every single one of your accounts on your FBAR that are foreign, even if they're not over the $10,000 limit. All right. Oh, also quick note, the FBAR, it is a lot of information to file, but don't be scared of it. It's paperwork. It's time consuming. There's no tax calculated. It's purely informational. The IRS is not going to go tax your bank accounts, right? Don't feel that that's going to be the situation. It's, like I said, purely informational. There's no income tax calculated on this form. And another trick, if you're really killing yourself over trying to find the maximum balance, you just cannot figure it out. So say, for example, it's a foreign pension account and you just don't know what the maximum balance is because you just don't have access to that information. And yes, this is foreign accounts, so not just bank accounts, but foreign pension accounts, foreign brokerage accounts, etc. There is a check mark check box on the F bar that says I cannot calculate my maximum. You can tick that box. I would not recommend ticking that box for every account, right? But if you really cannot calculate your maximum, you can always just file an F bar and say you cannot calculate your maximum. Oh my God, 71 chats. Let's see how the Q&A goes. We're at the end. All right, Q&A time. I hope that this was informational.
Yeah. No, this was really great. Thank you so much. As you said, we've had so many questions come in, and I've tried to, as people have sent them in, I've taken note of them, and I've tried to put them into some categories because we have so many different topics going on.